Well, that was an exciting countdown. Good morning, good afternoon, good evening, everyone, and welcome to this webinar on scaling digital innovation in emerging economies. My name is Simone Hinrichsen. I'm the Insights Manager for the GSMA Innovation Fund, where we support impactful startups with non-equity, early-stage financing, and tailored technical assistance to help them scale their innovations. It's really my privilege to introduce this webinar today, which is inspired by our recent report. We will share a link to that report in the chat so you can see it. And this report outlines scale in the context of LMICs and considers several pathways to scale, as well as the fundamentals of scaling. So if I look at the next slide here, these are the speakers we have today, and you'll get to know them in a few minutes. But what I'd like to look here at the following map, it depicts the further funds that were raised by the 21 selected portfolio startups that we studied in this report. And we looked at their scaling journeys. We looked at how they raised funds as they grew. And we'll be featuring 3 of these startups today, including eFishery, Sehat, Kahani, and Eneza Education. So the next slide here shows the organizations that funded these 21 portfolio startups. I'm sure you recognize a few of those logos there. And we believe that the ability to raise follow-on funding does show that investors believe a solution has early traction and is based on a sustainable and scalable business model. It's also a strong indication that catalytic funding can really help to unlock further investment. So in this report, we tracked, as I said, the scaling journeys through fundraising. And what we really wanted to do was look at what they use the funding for, the stories behind those that scaling. And I really encourage you to read the report for more details. But what I want to do this morning quickly is highlight some of their other impact. Let's look at eFishery first. As you can see, they've raised over $110 million as far as 2022 is concerned. They're an aquaculture startup in Indonesia, and they have deployed their solution to more than 23,000 shrimp and fish ponds across the country. Looking next at Eneza Education, they're an edtech startup that started in Kenya, but we became part of their journey as they grew in Côte d'Ivoire. So they operate now in several countries, and they've increased specifically in Côte d'Ivoire the number of users as of January 2020 was at 27,545 users on their platform. And next we have Sehat Kahani, and they are a health tech startup in Pakistan, and they have over 1,500 female physicians that are serving on their platform. And there are over 120,000 registered users using the e-health clinics and their mobile app. So that's just a little bit of an example of the impact that they have beyond, tracking their fundraising numbers. What I would like to do now is to introduce David Woolnough, Deputy Director for Tech and Innovation at the UK Government's Foreign, Commonwealth and Development Office. He's got over 25 years of experience sparking innovation and building successful partnerships with academics, innovators, and the private sector. He's been tackling global challenges in the clean energy sector and mobile banking, safe water, and assistive technology. So he's established some of FCDO's most innovative strategic partnerships in terms of tech for good. So thank you, David, for being here, and over to you.
Well, thank you, Simone, for that kind introduction, and many thanks to GSMA for inviting me to help kick off this really important event. And I guess thank you to you too for turning up to listen in. So I hope you enjoy it. So we in FCDO, we started our journey with GSMA and with Iffat from Australia over a decade ago. So we're really just trying to work out how on earth can the UK government work and partner with the mobile industry to spark innovations. So I'm delighted that 10 years later on, through GSMA, we've now supported over 100 organizations to test and scale digital technologies and business models that surround them, and that they are actually impacting the lives of millions of people around the world. So I want to congratulate GSMA for publishing this report, for digging into the analysis that it draws on. This is going to really help our understanding of digital innovation scaling journeys, of the real stories behind the success headlines, and understanding what's worked well, and even more importantly, which bits we still need to find solutions for. So there's no one route to scale, especially for innovation scaling in low and middle income markets. And so I hope these stories, as you read into this report of the 21 startups featured here, are useful as you plan your own scale-up story. And I hope that you enjoy the amazing panel that GSMA have pulled together for you this morning to bring a few of those stories to life. So the report itself, it kind of focuses in on the fundraising journey, as Simone has said, of innovations supported through the GSMA's Innovation Fund, one of the many bits of the GSMA partnership. And we found that a useful way to measure scale. So that's great. And I'm delighted that £23 million of investment funding has gone in and is dispersed to over 100 startups. And now that's attracted, I think your latest number is about 650 million of additional investment. And that sort of 30x catalytic effect is quite rare and really impressive. But actually, even more important for me are the other numbers behind those funding headlines. So the combined reach, I think, of those 100 innovations is already benefiting 37 million people who are now accessing life-enhancing solutions that just didn't exist before. And that is a lot of lives changed. That's really important for us here in FCDO. So this report that hopefully you'll see a link of is one of many that the wider Mobile for Development Partnership program with GSMA has produced. And we've just loved working with GSMA because it kind of uniquely positioned at that intersection between the mobile industry and the development sector. And it allows GSMA to play this really effective catalytic role. And our partnership with GSMA is just one of a wider portfolio within FCDO, where we're testing and scaling these potential technologies and business models that are really trying to impact the SDGs. So across FCDO, we have a multi-million-pound portfolio of innovation programming that seeks to drive economic development or poverty reduction or tackle climate change. And our offer kind of covers every bit of that, every stage of that finance cycle. So ranging from the early stage finance to large investments supporting businesses really to go to scale. So my personal focus is on that early stage innovators. And then we've got colleagues on British International Investment that are going to pick those up and drive them through to scale, as they've already done with a number of other GSMA funded startups like COPA or PEG or Lumos. And we got the Transform program with partnership with Unilever, which is helping GSMA grantees like Sanofi or Drinkwell. And you can read about some of these in this report. So over the years, the UK funding's de-risked many of the biggest innovations in the developing world, and many of them in partnership with the GSMA. And I think together we've genuinely shown that digital and mobile technologies can be cost-effective channel for delivering a wide range of services at scale and really helping the world's most vulnerable communities. But just as I wrap up, I want to just note that this report shows that there are still some real major challenges out there in taking digital innovations to scale. So I was particularly struck reading through about the light it shines on the gender financing gap for digital startups. Really important for FCDO, hit by that statistic, less than 1% of funding in Africa is going to startups funded by a woman or women teams. And that demonstrates we've still got quite a long way to go. So in light of this, I'm delighted looking across the panel that Iffat from Sehat Kahani is on the panel, who I know is supported through various FCDO programs and who's really helped GSMA dig into the nuances and barriers at the root of this problem. So I'll stop now and I'll pass you on to the rest of the panel, to some of the inspirational businesses who are doing the hard work on the ground and who will bring a few of these scaling stories to life.
Thank you, David, for that wonderful introduction. And now over to Max Cuvellier, the head of Mobile for Development. Thanks, Max.
Thank you very much, Simone, and thanks, David, for the great introduction. Great. So now we're heading to the panel and hearing from the people who are actually scaling or supporting those scale-up stories. So joining me today, there will be Bian, who's founder and CEO of the Hungry Lab, Dr. Iffat, who's co-founder and CEO of Sehat Kahani, who David just mentioned, but also Zach, who's managing partner of Launch Africa Ventures, Mohamed from the CTO from Eneza Education, and finally, Gibran, hopefully we can fix his connectivity issues, who's the CEO of eFishery in Indonesia. But I will start with you, Bian, because you contributed a lot to the report, obviously. So I will start with the questions to you. So you've looked at scaling. You've talked to a couple dozen of the organizations that we've supported through our innovation funds. And when it comes to scaling, the kind of same question keeps coming back. People are asking for some kind of magic recipe or some kind of secret sauce to scaling. But anyone who's been involved in supporting startups in the past decade will know that it's not that easy. It depends on many factors. It can depend on the market, can depend on the sector, on the type of business model. But what would you say are the main criteria that will influence the most how a startup's path to scale will look like? Oh, I think you're on mute. Sorry, it has to happen to someone in live events.
You can hear me. Great. So I think especially, thank you so much, Max, for the question, especially in the context of emerging economies, there are unique challenges within these geographies. And so when we look at the study, we found that a few of the key factors for scaling depended on the product, whether it was just 100% pure software, which allows you to scale a lot faster, or is it a combination of hybrid software and hardware, or a heavy hardware component. We saw that a lot of the hardware companies were dependent on supply chain, and then a lot of those issues came about during COVID, and so that had a negative impact on their operations. So that's a key thing. Another thing is early on, how fast can you mobilize force multipliers, meaning how, especially with partnerships, a lot of these startups benefited from GSMA's role in helping with telco partnerships, as well as government partnerships for a lot of the utilities companies. And so that being able to leverage a larger partner who has coverage and scale in the area already is really, really critical. Another thing we looked at is also how do you actually deploy the funds? It's not just about obtaining the funds, but the actual deployment of it. And we found that not just for product development, but investing in user acquisition in the beginning was really important. And also looking at not just the absolute metrics of scale, but scalability along each development phase of each startup, which differs in terms of the metrics involved. So those are really important, as well as internal drivers in terms of the operations and the efficiencies of the startup itself, as well as the external marketplace. So as you said, Max, it really depends, but we found that product partnerships early on and user acquisition strategies really played a key role in these markets.
Great, that's super interesting. And I noted your first point on hardware, and this is something we've experienced, that it just adds to the timeline and adds to the uncertainty. I mean, ironically, we're mostly supporting digital innovation, but I mean, we're rooted in the physical world, and it's usually the physical component that creates a lot of issues. I think you mentioned partnerships, and we'll hear this word again in the conversation, I'm sure. And we often talk about the importance of partnerships in scaling businesses. I mean, not all partnerships are equal, and some are easier and some are kind of more catalytic than others. Would you have any examples of like strategic partnerships that the startups in the study have forged that really help them on that scaling process, and any lessons from those?
I would say a great one to look at would be Drinkwell. In Bangladesh. So they had from a documentary, they were approached, actually, it was an inbound opportunity from the Dhaka Water Authority. And since then, they are actually now so closely partnered that they are embedded within Dhaka Water Authority's offices, and they are really leveraging that partnership to deploy their solutions across all of Dhaka Water Authority's coverage area. And I think that shows several things. One, it shows that telling your story and publicity actually helps. You never know where those opportunities are going to come from. The second thing is really understanding where your solution will be best serviced and by whom. Meaning that, if you are dealing with specifically in a difficult utilities market, having the water authority or the local governing regulatory authorities who actually manage that as your chief champion is going to be very critical. And so that's something that we saw that was a great example. And it's worked so well that they've actually hosted workshops of other water authorities in the area to show them how it is actually done. And you also require champions who are forward thinking and who are able to take the risk partnering with the startup, because in a lot of places, especially, when you have highly bureaucratic organizations, they may not be, or risk averse organizations, they may not be so willing to take that risk. So the champions are really important on the ground.
Great, thank you very much. And I love the fact that you didn't choose a private sector partner, but went for the one that seems even harder, like a public sector, very local, like dealing with water, obviously extremely important, but that has to have a lot of safeguards and so on. And still, they managed to make it work. I think it's a great example. And also, I'll put a shameless plug here. Our digital utilities team wrote a great report on partnerships between startups and local authorities. That if you're in that space, you should really look into.
We helped write the toolkit for that.
I know, and this is probably why your choice of example came from. One last quick question for you, and obviously I'm always asked this question. It's a hard one, but from the scaling stories that you looked at, is there one like that particularly surprised you or puzzled you outside, obviously, of Drinkwell?
I wouldn't say puzzled. I would like to say that really was very heartwarming and very inspiring when we look at, the gender financing gap. Let's look at actually positives of actually leveraging what some might consider a statistical disadvantage and turning that into a great advantage. So we have Dr. Iffat, who is with Sehat Kahani, and I like to use them as a great example of actually, understanding that women were part of the solution in terms of the covering the market gap. They realized there was a huge market gap from both the end user side in terms of patients who required digital telehealth care, as well as the supply side and the gap there, and being able to fill that with women doctors who had previously left the workplace. And so, and with two female founders being able to leverage partnerships with Jazz, Pakistan's telco there early on, and being able to really lean into women as the solution of the gap and solving those challenges, and being able to scale. And they have a great success story that Dr. Iffat will share. So I think that is a great inspirational story that I like to tell.
Great. I mean, and this is a perfect segue, obviously, to Dr. Iffat. This is also one of my favorite stories, because it is one area where you would think that there's so many obstacles, and if I can talk about those in a second, that it would not work, targeting women, like female founders and so on, and still it did. And I have to thank Simone, who managed to just share the link of the report to the link to the report that I just mentioned as well. But turning over to you, Iffat. So as we were just saying, you have managed to raise funding to finance your growth, despite a difficult, both global and unfortunately local context at the moment as well. I'm interested to hear what you think helps to convince an investor to come on board when the overall economic and political situation is challenging. And also, second part of this question, does it make a big difference whether you're dealing with a local investor or a foreign investor?
First of all, thank you so much to the entire GSMA team, to the DFID team, the FCDO team for being a part of this and being a really important part of our journey. Had it not been for the trust that GSMA held in us in the very initial part of our journey, I think we wouldn't have been here. So for the advantage of everyone, Sehat Kahani is a telemedicine-based organization. We are two female founders, me and my partner, Sarah, and we created this organization with the notion to enable healthcare access for anyone in Pakistan, because it's the fifth largest country in terms of its population, yet even today, 50% people don't have access to healthcare. And one of the prominent reasons is that women doctors drop out. So ironically, two female doctors come together to build an organization enabling more and more doctors with a special focus on female doctors, allowing them to come back to work. And I think in our journey, meeting the right partners at the right time was really important, whether it was donors, whether it was investors, whether it was corporations who partnered with us at the time when we were a really young organization, trusted in us, and have held our hand since then. We are an organization, and I'm so proud to be a part of this GSMA report. But I'd really like to share here that since that journey till today, now we have a network of 59 e-health centers spread all across Pakistan. We have done over 2 million consultations. We also have a mobile app now, which has a consumer as well as a corporate vertical, which is being used by 700 plus companies in Pakistan with an unlimited access for their employees and their families. And these include leading banks, telco sector, in collaboration with the leading insurance providers in Pakistan. And I think one thing which is really important for me here to state is the application was actually built by the very first fund that we got from GSMA. So I think had we not gotten that fund, the application wouldn't have been built. And I think this is the strategy that, being two female founders, we have had since the beginning. We are a social impact business. We are a for-profit entity where the sole focus is to create sustainable solutions while creating good, but also creating enough financial means in the organization. And I think that has helped. So our focus has not just been the VC market, but we've also, from time to time, taken constant funding from other non-equity based mechanisms as well. So GSMA was one example. We have been associated with FCDO, or what was called Iffat earlier, for some other programs as well. They have supported us. We have been part of USAID. And I think in that journey, one thing that has helped us is that it allows you to scale your organization, grow its value without really having to be diluted at the really early stage. I think when you talk about how easy or difficult it has been, so fundraising has been difficult. Then being two female founders, it becomes all the more difficult. The kind of questions that investors tend to ask, especially when you're really early on in your journey, and especially from local Pakistani investors, the journey has been challenging because unfortunately Pakistan is still quite a patriarchal country. So you won't see, this thing to be really common that two women come together, create a company, and they're fundraising. And it's not just a social impact organization, but a commercial organization as well, which is growing in terms of financial means as well. So it has been challenging. The overall landscape, or the total funding that Pakistani founders raised, the percentage of Pakistani founders has been in points, in decimals, in the last 2-3 years. So that's a really niche segment that I talk of. However, one change that I've seen, so as we progressed from our seed funding, in which GSMA was a part of it, to pre-Series A in 2021 of around 1.2 million, and now that we are raising our Series A round, one difference that I've seen, especially in the international investors, is that after reaching this point, gender becomes a secondary notion. So especially with the international investors, I don't see gender becoming a challenge anymore. At times, the way Bian said, it can actually be an advantage, because now not only do you tap into regular funding opportunities, but also female-specific funding opportunities. But yes, I think women are grilled more in terms of the investor-related questions. So that remains something which I think the international market still, in the future can work on.
I'm still happy when I hear that you say that when you have track record, it actually, you can somehow turn it into an advantage. But unfortunately, what you describe in terms of the gap of funding going to a female-founded or female-led team in Pakistan, and it's not just in Pakistan. I mean, looking at the numbers across Africa, they're pretty bad as well. Yeah. Maybe like, as you're specifically in the health tech sector, what would you say are like specificities of this sector in particular in terms of scaling and fundraising? And I think it would be interesting as well to hear how COVID impacted your growth, obviously.
So I'll first talk about COVID, and then I'll talk about investment in the healthcare sector now. So I think with us, COVID played a very positive role in helping us scale. When COVID came, we had just developed the application. Its initial version had come out. We were testing it. And like any other experiment, since initially we used to build telemedicine clinics in low-income communities, which were assisted by nurses, this was a completely different model. We were testing it out in the urban populations. The user was supposed to have the application in their phone, and not everyone in Pakistan owned smartphone or owned enough digital literacy at that time. But I think COVID changed a lot of things. people were actually scared to go to hospitals because they realized they were more exposed, especially for the children, for the elderly. So they realized that, okay, we need to speak to a doctor, but we cannot physically go, or we shouldn't physically go. So I think that played a really positive role. I think some partnerships really played well. So we were partners with the federal ministry, where we were able to give out our application free of cost, actually, for a few months, where again, GSMA again supported us and played a really important role in helping us enable this service for people without having the worry that who will pay for it. And we opened it up free of cost for everyone, which included general physicians, specialists, mental well-being experts. So the usage increased. In the same time, we also started exploring partnerships with corporations because we understood a lot of companies wanted to benefit their employees who were working offline at that time. And what better way to give them access to an online healthcare service where they are connected to a doctor any time of the day that they want to for themselves or their family, and they don't have to be exposed in going to a hospital. So I think these things worked beautifully during COVID. That was the same time when investment ecosystem, both nationally as well as internationally, also grew tremendously, and hence we were able to quickly raise our pre-Series A as soon as COVID was at its ending phase. But having said that, I think now as the global economy and with the political instability or uncertainty, unfortunately, that Pakistan has been going through in the last few months, investment in sectors such as health, such as education, have again dipped down. And I think that becomes really challenging for organizations like ourselves to scale up. So while we are creating sustainable month-on-month revenue, we are afloat, but how do you scale if you're not able to raise investment? And I feel the investment has become really, especially in my part of the world, in my country, it has become really focused for e-commerce, for finja, for financial solutions. But I think a lot of investors fail to understand health and education are two things which will continue, which will not end, because they are a necessity and not just solving a problem which, even if it doesn't get solved, can continue. So I think the ecosystem really needs to shift their perspective.
Yeah, I completely agree with you, and I think health and education in particular, I would probably also add like areas like energy and water are really there to just improve lives
Climate
and sometimes
change.
make up from like government services that cannot catch up with population growth or rural areas and so on. And so yeah, it's particularly important to attract funding to these areas. Thank you very much. Well, we might come back to you. I'm looking at the chat. If anyone's got specific questions for any of the panelists, please drop them in there, and I'll try and ask them towards the end. But I'm now going to turn to Zach. So Zach's managing partner of Launch Africa Ventures. I mean, if you haven't heard about Launch Africa Ventures, they're the most active early stage investor in Africa. They've made more than 130 deals in the past 2 years. That's a deal a week, basically, even more than that. I don't know how you do it. But basically, that means that like you and the team must be receiving hundreds of pitch decks. And as we're talking about here, scale and potential to scale, I'm interested to hear, if you only have 10 or 15 minutes to look into a company, to look at a deck or to look at what they do, what are the key things that you will look for to identify whether a given venture has the potential to scale?
Yeah, thanks, Max. It is very hard, especially when you're dealing with companies at the pre-Series A stage. The one thing we've gotten really good at, and the reason why we can do on average a deal a week over the last 2 years, is because we've spent, I would say, close to 7 years building relationships with the largest venture builders, accelerators, and incubators across Africa. And it's not a coincidence that our team has a long history of running venture builders and accelerators across Africa prior to us starting the fund. The one thing I would say that sets apart a good venture from a great venture is the fact that very early on, they reduced the cost of customer acquisition down to a few pennies versus several dollars per customer. And the only way you can do that in markets like Africa and maybe to a certain extent Southeast Asia and Latin America is to use other people's networks and other people's resources. And other people here refers to large corporates, right? So, call a spade a spade. Africa is to a large extent run by oligopolies. So it's run by large insurance companies, large banks, telcos, and retailers, right? So even though Africa is 54 different countries, if you look at the telco industry, I'm glad that GSMA is a key part of this discussion. You've got MTN, Airtel, Vodacom, Orange as the 4 primary telcos on the continent, with a few fully owned subsidiaries. So if you're creating a solution, let's say for peer-to-peer payments or airtime advances or an e-commerce platform or a telemedicine platform, there's no way that you cannot ignore distribution that telcos provide, right? The problem with most founders is they think that they can blatantly copy models in Silicon Valley or Beijing and just go to customers directly. You can do that if you've got, a $5 to $10 million war chest pre-seed, which, that capital is available in Beijing and Tel Aviv, Berlin, and definitely San Francisco. It's not available in Nairobi, Kampala, Kigali, Cape Town, or Cairo, right? Or for that matter, most of Latin America. So what you need to do is very early on, you need to be able to sacrifice, I've said this so often, and I'll keep repeating it, you need to be able to sacrifice margin for volume, right? So there's no point having 50 to 60 basis points on a trade and have 100 customers. I'd rather shave my margin and share it with the telco or a bank or a retailer. So what we notice, or what we look for in smart founders is, what are your B2B partnerships? How many POCs do you have? What are your pilots? And we'll go even further and say, tell us who you have a pilot with. How can we help you build that from a pilot to a commercial, 2 or 3 year contract? And give us the numbers and details of the key people at these telcos, so we can verify these pilots and help you enhance it. A lot of founders find that a bit intrusive, but if your VC isn't doing that for you, then they're not worthy to be a world-class VC. You'd rather just be an angel and just put some money in there and hope to God that in 5 years you get your money back plus a return. So I'd say corporate partnerships are probably the biggest indicator of whether a venture will succeed or not. And just the last one I'll make there is, you can start off with the B2B business model, and slowly, once you get to $1 million of ARR, you can then pivot to a B2B2C business model. But if you're starting with B2C, it's very hard to scale. If you look at all the 11 or 12 unicorns in Africa in the last 3 years, they all fundamentally have B2B business models, which then later pivoted. So I'd say that's the one thing.
Thank you very much. And I like your point on the volumes game in particular. It is having worked with mobile operator for the past 15 years, this is what it is. This is what it was about voice. This is what it is about mobile data. This is what it is about mobile money as well. And I think it's particularly interesting, the fact that you mentioned that it's easier to get to that kind of volume if you work with someone, if you just stand on the shoulders of giants, if I can say. And again, we did reports back in the days on that, because we're really one of the focus that we have, the work we do with FCDO and KEITA and others, is really to try and connect the startups to mobile operators to enable growth. The other point that I like that you mentioned in the beginning is that, ironically, you are seen as one of the, a handful of early stage VCs in Africa that do a lot of volume. You are seen as building the pipe, but you turning to the earlier stage players, the incubators, the accelerators, and thanking them for actually building that pipe for you, really shows that we're looking at a real ecosystem, and companies jumping from earlier support to their first fundraise and then the next and so on. And I think I'm interested in looking at the role that existing investors, so once you've invested in a startup, the role you play in helping them raise their next round. Because that's usually often understated. People think you invest and then you sit back and wait for them to raise more money. So you can hit multiples. But what role do you play in that growth?
That's such a great question, by the way. Thank you for asking that. I think gone are the days where I mean, when people put angel groups, friends and family, and VCs in the same sentence, I really get pissed because they're very, very different animals altogether. So there is a role for angels to put seed capital, mostly pre-revenue, pre-seed money, without a lot of strings attached to it, and that's perfectly important. But when you're in the VC industry, you really need to be adding a significant amount of non-financial value, and it is a lot easier than what the world makes it out to be. So let me just give you 4 or 5 things that VC should be doing to help their founders get to not just your next round of funding, but the next stage from a revenue and traction perspective. So one is, if you're a VC and you've got more than 10 companies in your portfolio, and 10 is a small amount in this industry, you have to actively help your companies create synergies amongst themselves. So most VCs that invest in payment companies also invest in lending companies, also invest in credit companies, all of which feed each other. Because as a founder of, let's say, a payments company, your network is very limited, and you're like a racehorse just looking at the finish. So intra-company synergies, I mean, if you look at a smart person would just go and look at how does Sequoia and Axel and A16 construct their portfolio? They construct their portfolio almost selfishly, such that each one benefits from the other. Those economies of scale, very hard to compete against. So VC should be doing that. Number 2, founders don't have the time to look at cross-border expansion. It's bloody expensive and hard to do. So what VCs should be doing is helping partnerships be put in place between large tech companies like Google, Microsoft, Amazon, as an example, that can help a company, especially in the enterprise SaaS space, move into different markets seamlessly. Hiring and talent, that is probably the second most important thing outside of capital. In many cases, the first biggest concern. I'm not saying that VCs should become recruiters. Hell no. But VCs get flooded with applications from very smart people that want to work at tech startups. And VCs, really, every VC should have a job board for their portfolio companies and founders. LPs. I mean, VC funds often have 20, 30, 40, 50 plus LPs. I mean, we have more than 200. We're a bit of an anomaly. But founders should not spend more than 3 months of a year fundraising. I don't care if you're doing a seed or Series A or a Series B. Your role as a founder and the CEO is to run operations and scale. So VCs should open their LP networks for co-investments. A lot of VCs are very protective about their LPs, and I understand why. But in a market like Africa and Latin America, where the VC market is still in its infancy, LPs should be allowed to co-invest with their VCs, and LPs want that. A lot of LPs and funds want access to deals, and they would love to co-invest alongside their VC, right? So we allow our LPs to co-invest with us for free. So all of these things, and I mean, I could go on forever, but I mean, the one final thing I'd say is media and exposure. I mean, we've all seen so many festivals, from VivaTech to South by Southwest to Pioneers and Web Summit and Super Return, et cetera, et cetera. One every week, right? But if a founder of a startup applies to these festivals, I mean, there's GITEX Africa happening in Marrakesh in a couple of weeks. Founders go and contact these events and say, I'd like to speak. They're like, who the hell are you? Like, there are thousands of you. But if the VC says, hey, I'd recommend this company to speak on this stage about this topic, there's a 90% higher chance that startup will be asked to speak. So as a VC, you've got to really add value in all these ways and more. Otherwise, you shouldn't be a VC. I'm sorry. And that's how you help get to the next round of funding and traction, right? So.
No, that's a very strong list, and I think it's a helpful list not only for existing VCs or aspiring VCs, but also for startups to just be able to turn around to your existing investor and say, this is the support that I need. Give me access to your LPs. Help me raise the right talent. Help me find synergies with companies that you have very strong ties with. Give us exposure. I think it's a very strong list, and I can imagine as well that when you're managing dozens of startups, it's you will spend more time with those that actually come with clear asks from you, rather than the ones that lay back and wait for you to go to them and present something to them on a silver plate, if I can say.
Yeah, exactly. Absolutely. We will, as VCs, we will prioritize the ones that are more proactive. If you sit back, if you don't report, if you don't have asks, we're gonna not show any interest because we've got other fish to fry. And but yes.
Yeah, thank you very much. That's super helpful. In the interest of time, I'm going to turn to Mohamed from Eneza Education, and then Gibran here. I think you just mentioned that like replicating to another market is actually like very complicated and very time consuming, and we hear a lot of those stories, like people who just. I mean, people assume that there's actually a lot more replication to another market happening than it actually does. And I like the example of Eneza because, as Simone mentioned earlier, Eneza was born in Kenya, but also replicated in Côte d'Ivoire, and that's where we supported them a few years ago through the Innovation Fund. And so, Mohamed, I'm interested in learning, like, what did you learn from like taking your model to another market, and what worked well and what didn't in that process?
Okay, thank you. So the first thing, it's expensive. It really is, and it's not something as a startup you can just start doing. We do target population and in rural areas, and they are not population who have a lot of money to access your product. We work with telco companies, so working with GSMA is a plus for that. At first, we did have separate teams in different countries. So a team in Kenya, a team in Ghana, a team in Côte d'Ivoire. So running that is close to I'm native French, so
no,
sorry,
don't worry.
I'm having with, so it's a bit difficult. So we've changed the way we scale. So we used to do that way, but now it's more of an auto-scaling architecture that can scale from Kenya and be deployed in different countries. Right now, we went beyond Côte d'Ivoire. We are in Sierra Leone, and there we work with the telcos, the telecom companies there. And from Kenya, we did set up all of the application, and we were able to run that. So having teams in different countries didn't work that well because it's expensive. Instead, having an architecture that can scale from Kenya to cover every country in Africa and work in partnership with telecom companies, with GSMA in the background, is more why am I going to this word again? So it's better.
Sustainable.
Yeah, it's better. And then, so this is kind of a summary of.
Great. What I particularly like about the model from Eneza, and the reason why we worked together a few years ago, is really like the ability to work with mobile operators was one of the key elements of your business model. And as you explained, you are targeting people in rural areas that might like have lower literacy, not access to smartphones, and so on. And as your ambition is to deploy education to larger population possible, if you can't rely, as Zach was saying earlier, if you can't rely on someone who's already done the groundwork of connecting people and like leveraging that, it's a much harder game. And I like your point as well in terms of how you structure things. I mean, creating full teams in each country can be complicated, but in a lot of areas, I mean, fintech is usually one that comes to mind where the regulation is very different from one market to the other and you need to change your structure. But education is the same. Your curriculum and like the way an education ministry looks at things is very different depending on the market. So yeah, two very valid points here. I have one specific question for you, because obviously looking at your title, your CTO, and when you're thinking about growth and scale, this is something that like obviously involves the whole organization, though there's sometimes the misconception that maybe the sales team or the business development team or the marketing team are really fully in charge of scale and replication. So I'm interested to hear what's the role of a CTO on that scaling journey?
So this the role is kind of a central role, if I can use that word. So when we are talking about scaling, we are working around an architecture. So we need a scalable architecture, and that's this is the responsibility of the CTO. But beyond that, beyond that scalable architecture, there is a whole range of technology and strategy that need to be put in place, not forgetting the costs. Whatever you are going to do that is going to work across countries need to be done keeping a close look at how much it costs, or else it will grow to a level you can't afford. There's security and compliance. So when you go into a new country, you will have some rules, and right now, most of the countries have something close to the RGPD coming from Europe. So most countries will want you to keep data inside the country, but you may not have like an auto-scaling data center there that have interesting hourly rates. So this is a bit like you have to manage that as a CTO. Then there's also hiring, because if you expand and you acquire new talent in different countries, so that needs to be handled. Stakeholder communication, you talk with telecom companies and with government, and then you have the C-suite. You have to explain everything. So there's a lot, and there's also the partner management. So there's a lot you have to do as a CTO for this to be successful.
I think this is a very important point. Like growth is something that the whole organization needs to be behind and supporting. Someone once compared a startup to a living organism to me and just said, you can't just grow your muscle mass without growing your like skeleton at the same time, your brain power and so on, and it all works together. So I think it was very important for everybody to hear that the CTO has a role to play, obviously, in that, not just in terms of implementation, but also strategically in a growth and scaling story. I'm now going to turn to Gibran, who's the CEO of eFishery. Last but not least, as someone could say, Gibran, pun intended, is probably the big fish in this pond of startups that we work with, because in a few years you have gone from zero basically to what people rumor it to be potentially the next unicorn in Indonesia today. You've raised like close to $100 million. And I'm interested in hearing what are the different stages of that scaling story. You don't go from 0 to 100 in one jump, do you? And this is where we have a technical issue. Okay, let's park this question for now while we see if we can get Gibran back. He's dropped out completely. But don't worry, I still have a couple, and also there's a couple questions in the chat that we can look at. One was, can you rewatch this later? This is an easy answer. Yes, absolutely. This will stay on LinkedIn, so you can rewatch it and share it. There was one on targeting rural customers in particular. And Mohamed, you touched on that a little bit. So maybe I'll turn to you, Iffat, on this. What is like specific about trying to approach rural customers? And then we'll see if we can go back to Gibran.
So I think, and I was looking at the question, rural as well as emerging economies. In my experience in Pakistan, at least, what I've seen is that infrastructure is not a problem. It's not a challenge. And by infrastructure, I generally talk about having physical spaces where telemedicine can be, conducted through a network of, healthcare professionals. But I think what has been a challenge in the past, which to a large extent, a lot of the telco companies have taken care of, has been internet connectivity. So one challenge that we faced in very rural communities has been the lack of internet connectivity. Or even if internet is available, I think the lack of literacy that people have in these communities, which leads to them not trusting digital products or solutions which are catered through a digitally enabled device. I think that has been a big hindrance in my experience in such, places or such communities. However, when you talk about emerging communities, emerging economies, I think opportunities for growth in such places are immense. People are eager to learn more. People are internet availability is there, adaptability for new innovations, WhatsApp, voice notes, even for example, if the literacy level is low, adaptability for newer things and newer innovations is higher. So I just feel that it's easier. But I think there is a shift. Even in the rural economies, the shift is happening as more newer, younger generations are coming forth. Their adaptability to technology is much better than the older generations.
Yeah. And I think it's about obviously making sure that the older generation doesn't get left behind, or people in rural areas, or people with like lesser level of literacy, or women and so on. It's always like trying to get to as many people as possible. Thank you very much, Iffat. Gibran, can you hear me?
Hi, Max. Yeah, I can hear you.
Yes, perfect. So I don't know if you heard my question, but in short, was basically interested in hearing the different stages you went through in your scaling story.
Yeah, I think over the past 9 years that I built and scaled eFishery, the basic, like the milestone that is quite apparent is that over the first 3 years, your focus is that like PMF part of the business, right? You really focus on how to build the product, create a MVP, and then finding an early adopters of that product itself, and get an early traction to prove that your product, your services, the problems that you're solving is fit with what the market really need, and you gain some early traction to see that is actually something that you were pursuing. So the focus and I spend most of our time really designing the product and building the product. So that's more like wearing product hat, and also commercially in the context, and convincing early adopters to use this technology. And after that, the focus is really finding like the scaling process, particularly in my case, is how to scale from early adopters, go to the early majority by really building a distribution channel. So the second part is establishing a channel of distribution by, for my case, it would be scaling the sales team, get the sales team, build the sales leadership, build the sales organization, really create a structure in the process, because you can't just really depending on the quality of the product itself to really scale, because the distribution, the channel itself, and how you gain the more audience and more market is important on that front. So I think that the scaling and really focusing on one part of the product, one region, one part of the product, and get more adopters. And after that, it's all about scaling like horizontally, you get more geographic, opening more cities, opening new areas, and how to then replicate. So if the first part is really about the product, the second part about the distribution and channel, the third part is really about the replicability of that growth model. So if you already have that growth model, whether the growth model can actually be implemented in different area and different region, whether you need to then rearrange the model and really get that engine of growth for having like horizontal type of growth. And then after that, then it's about the like diversification or opening up a new verticals and creating an ecosystem. And of course, funding stage would be part of that, right? I mean, from the seed stage to Series A up to the Series C and Series D, when you have more mature product, but it's about how you're improving your profitability, but you're going to the next scale of the business on going to the new countries, for example, going to the new value chain, and how it's all like getting about the really big scale and securing the market leadership, because finally then at that stage you have quite a big dent on the market to see that, hey, I can have like already have like say 4% of the market. How do you get to the 15% of the market, which was not the terms that we never used at the early stage because you didn't have any customer. So I think that's quite an exciting to see how you grow over time. But as an organization, as a leader, then you also need to wear different hats and learn and grow yourself in a different way.
Thank you very much. When you lay it out like that, it sounds so easy, but we know it's like 9 years of very hard work. But to summarize, product market fit, then distribution channel, and scaling horizontally and seeing how you replicate, and then finally like diversify. We're running out of time. I have one last question for you, which is probably like something that happens later in the scaling story. But at what point, when you've grown to the size you're in, at one point do you start considering becoming part of the scaling story of other ventures, for instance, through investing in earlier stage startups yourself directly, or even acquiring other businesses to accelerate your growth?
Well, of course, I think it's no-brainer that it's on a personal level. If you would like to do the angel investment, you need to have liquidity, right? You need to have money in the bank before giving back to the city, because you need to have something to give back to the ecosystem. So I think at that point, maybe on the growth stage or the later stage when the liquidity is possible through secondary and everything else, then you start to think through about that process. But on the company level perspective, that's when you get to the late stage that I mentioned earlier, the later part of the business, which is diversification. Because at that point, you would like to build the capabilities and really grow quickly, and you have excess capital because your business is generating cash, or the investors would like to give money and would like to hear the new growth story. Then that's where the M&A, the acquisition, and everything else comes into place, because you already part of the story. The market is already penetrated. The product, you've developed the existing product in the market. Then suddenly, then you start to think to how to go to the new market with new product from there.
Yeah, that becomes kind of a natural evolution of your growth, having to rely on others. We're coming to the top of the hour, and I think we're already like 15 minutes over. So unfortunately, we're going to have to close, because I know a couple people here have lended us some of their time but have a commitment on the hour. I want to thank everybody who was involved in the report. It's a great read with a lot of great stories that can fit, like, regardless of where you are in the ecosystem, you'll find a story that will resonate with you. It's super interesting there. Obviously, the donors who have funded those innovation funds over the years, FCDO was here earlier, but there was also KEITA and DFA and others before that. And finally, the panelists. I think it's been great to hear your unedited comments on the easy and the not so easy part of growing yourself or supporting the growth of others. So very interesting conversation. Super happy to have had you, and thank you to everyone who watched us or who will rewatch us in the future. Bye, everyone.
And thanks, Max, for a great panel.
Thank you.
Bye. Thank you. Thank you so much.
Thank you.
Cheers.